Hello, everybody. This is Bennett Tchaikovsky, and welcome to my problem walkthrough for problem 11-3. So let's take a look at this first one. On May 5th, machine A was sold for $13,000 cash. Company's bookkeeper recorded this retirement in the following manner in the cash receipts journal. Okay, so right over here, so they did cash, basically 13,000, and then machinery, $13,000. Okay, so whenever we retire an asset, we're going to have loss. Okay, so for this first one here, I would never give you some of the year's digits, and the reason why is it basically came up from an SEC examiner, said he's never seen it, and they didn't even call it that. So the way your book is, so whenever we have an asset, right, what I have to go through and do is, if I'm looking over here at accumulated depreciation, so right over here, so my accumulated depreciation on this equipment is going to be, let's see here. This is going to be through 2020 was 31,200. And just for fun, okay, so some of the year's digits is that what you do is you take each year of the equipment, and if I do, and then basically what I'm doing here is I'm dividing this value here by 55. So, and I don't take any in my first year. So in 2016, I would do 10 out of 55. 2017, this would be 9 out of 55. 2018, this would be 8 out of 55. This would be 2019. This would be 7 out of 55. 2020 would be 6 out of 55. And for 2021, this would be 5 out of 55. And that's where the book is getting this number. So what you do is you take the acquisition cost, which is going to be 46,000, minus the salvage value, which is 3,100. And I'm dividing this by my estimated useful life. Actually, no, I don't do that. I multiply this by the digits. Or here, it's going to be by 5/55 because we have to do this for 2021. What we have to remember here too is that when you sell an asset, you have to take the accumulated depreciation off of its books. So right over here, if I go through and do this, this is going to be 46,000 minus 3,100. I'm going to take this value and multiply it by 5/55, or 1/11. Okay, so I get 3,900. So the total amount of my accumulated depreciation on this equipment prior to the sale is going to be right over here. So I have to go through and I have to basically take this part of it off of my books. Now, what they did was they already recorded this. So if we were to go through and kind of clean it up, if I were to reverse this entry, mainly debiting machinery for 13,000 and then crediting cash for 13,000. So if I reversed, now what I can do here is put in the correct amounts. I really need to be putting in 13,000. I need to take this equipment off of my books. And so now I have a normal depreciation problem. So I'm going to have a gain here of 2,100. Your book solution just doesn't show the cash, and it also reduces the amount of the equipment. But I think if we do this part of here first for part A, it's going to make it a little bit easier. So let's go over here. So that's letter A. Letter B. On December 31st, it had been determined that machine B had been used for 2,100 hours. So for the units of production, this would be 51,000 less the $3,000 salvage value divided by the total estimated, basically the total hours of use, which would be 15,000. So this here would be giving me 48,000 divided by 15, or at a rate of $3.20 per hour. Okay. So if I've taken a total amount of depreciation of 35,200, okay, and that gives me this number right over here. See, I can make this really messed up. This is really good. Okay. And if I divide this by $3.20, because remember, the 320 times the units produced is going to give you this amount. And there's a reason why I'm going through and doing this. And the reason why is that I always have to be careful about over depreciating an asset. So if I take 3.2 and I divide this through, I'm going to get over here. So to date, I have produced 11,000 units. So that's the total number of units taken to date. So I've taken 11, or basically, this is actually the total amount of hours. So this is the total amount of hours I have to date. And the reason why this is important is that if I go over here and if I use it for 2,100 hours, I'm fine because I can go up to 15,000. But if I go say 6,000 hours, I'd have to stop at 4,000 because I can never go beyond this or I'm going to hit in the salvage value. So right over here, what I do is I'm going to take my depreciation rate. Okay, so it basically says here 2,100 hours, so that's fine. So basically this is going to be 2,100 hours. So it's going to be $3.20. So my depreciation expense for 2021 is going to be $6,720. When I record depreciation expense, it's always going to be the same. So that's how I go through and record depreciation expense for letter B. Okay, letter C. Before computing depreciation expense on machine C, the management of Eshkol Inc. decided the useful life remaining from January 1st, 2021 was 10 years. Okay. So what I have to do here is that this was produced, this was through 2017. So whenever I have a change in estimate, I have to handle it prospectively. So let's take a look over here, like at letter C. So through the date of change, I had 80,000. And I have taken depreciation on this so far. Was 15,000. So the remaining amount of depreciation that I can take on this asset is going to be 65,000. And so over here, what I would do is I would say, okay, new depreciable base is going to be 65 grand. I'm going to be dividing this by my estimated useful life. Which is going to be 10. And this is here my salvage value. My salvage value for this one here is 5,000. Okay, so the amount I'm going to be depreciating each year is going to be 60,000 divided by 10, or simply $6,000. Okay, so journal entry for letter C is going to be exactly what it was for letter B. So we'll say 80 equipment C. And this is going to be for 6,000. Okay, so that's letter C. Okay. Letter D, on December 31st, it was discovered that a machine purchased in 2020 had been expensed completely in that year. This machine cost $28,000 and had a useful life of 10 years and had no salvage value. Management has decided to use a double declining balance method for this machine, which can be referred to as machine E. Okay, so let's take a look over here for machine E. Okay, so what I did was I basically put in depreciation expense for 28,000, and I credited accumulated depreciation. Okay, so what we should do, this is my original. I'm gonna go ahead and reverse this so we can start fresh. So if I'm doing double declining balance, this is going to be my acquisition costs minus the accumulated depreciation taken to date, which is going to be 0 for this year. I'm dividing this by the estimated useful life, and I'm multiplying this by 2. So over here for this one, this is going to be 28,000 minus 0, because I haven't done anything yet this year, times 2. So this is going to be 2,800 times 2, or $5,600. So this is going to be my journal entry to go through and to record the depreciation expense. Okay, so the way that they're going through and doing it, though, is that they didn't even use accumulated depreciation. What they did was they basically said depreciation expense, and then they just credited the machine. So they reversed it by debiting machine. Hold on. Okay, so my journal entry to record depreciation expense, let's get that part of it here, is correct. What they were trying to go through and do. I guess I'm reconnecting. I don't know if I'm still going. We'll see what happens. So what your book does is they basically, I think that they were saying expense. So I guess they bought the machinery, credited cash, and then they did depreciation expense and credited machinery. So what the correcting entry should be is you have to do a debit to machinery, and you would credit retained earnings, or over here, this would be the depreciation expense. So that's what your book is doing, but this part of it here is correct. Okay. Last one here is that to do letter D. Okay, so for letter D, this is going to be my original cost minus the accumulated depreciation to date. I'm dividing this by 10, which is my estimated useful life, and I'm multiplying this by 2. So for this one here, this is going to be 80 less 16, or 64 divided by 10 times 2. And so then this amount here should be basically this should be 64,000 divided by 10 times 2, or 12,800. So that would be the depreciation expense basically for this one right over here. So prepare the correcting entries, record the depreciation expense. Oh, it's telling me no entry is necessary for machine D. Well, I guess I didn't have to do that. Anyways, thank you all for joining me here today, and I look forward to seeing you on the next problem. Have a great one.